Hi, everyone. Thanks for joining us today. This is FinanceFeeds video interviews. Today, exclusively, we have with us Drew Niv, who is CEO of TraderTools. Drew, thanks for joining us today. Happy Friday.
Happy to be here. Thank you.
So, Drew, it's the tail end of 2022. Year's almost over. I wanted to find out from you what you think were the key trends or the key themes that stood out to you this year in 2022.
I think probably this is and everybody, who's following the industry knows this is probably the turnaround year that stopped kind of these 10-year drought in retail effects, that started sort of 2012, 2013, depending on when you want to say it, where volatility just kept falling and falling and falling and would not come back, and interest rates were zero post financial crisis, and people didn't feel the effects of zero interest rates until volatility really fell off,
Hmm.
right? And it became a much more difficult industry after those, at those years. And we had a tiny little break in the beginning of 2020 with volatility with the pandemic, and then we're back to depressing times again,
Hmm.
volatility wise. But I think this year, obviously, interest rates starting to come down. There's like a sustained increase in volatility that's more than just geopolitical. That's really, a financial structure change, in how markets are behaving because you have an interest rate change. So I
Hmm.
think that this is, I think, like the 22 is the beginning of probably a 3 to 4 month, 3 to 4 year kind of bull market cycle for FX,
Hmm.
and kind of mirroring 2007, to 2011, 2012, like kind
Hmm.
of late '07 to, 11, 12. That's kind of was that last bull market cycle for FX. That
The
was
gold, the
obviously
gold, that golden age, that golden
the
age.
golden age. Yes. you know,
Yeah,
and
yeah.
that, it's very hard to be operating, in those times. And I think that what's interesting for the industry is people who have survived this long,
Hmm.
right? Really optimize the business to survive in pretty rough, unhospitable waters. And, now are actually going to reap the benefits in a pretty big way.
Hmm.
And, I think that, people should be looking definitely forward to that. I think that was kind of the big, change this year. There's obviously some small micro changes that everybody knows that, obviously this iOS with the issue with the
Meta quotes.
24
Uh-huh.
and like the things like that. There's, I think the rise of prop trading, I think is like a big, thing. There's some, and those are smaller trends for now, but
Sure.
they're definitely big. They're definitely, real news. But I think interest, what's going to happen, in the next few years, be it a recession, and we already have one in Europe, like be it what's going to happen in the world, inflation and all that. I think that's going to change a lot of stuff,
Hmm.
right?
Okay,
So I think that's 22 kind of started that process.
sure. Great. I wanted to shift gears a little bit. I want to talk about crypto because you have been vocal about what's been happening in the crypto industry and the crypto markets in general. One of the things I heard you say was that you're quite adamant about crypto companies filing for Chapter 11 bankruptcy. And I wanted to ask, this may be related to your previous comment. Is this sort of, as a result of your experience in the FX industry? Like you said, there was many years of issues, stagnation, trouble, let's say, within retail effects or traditional effects as we know it. Can you sort of elaborate a little bit on what you sort of your position on that?
Sure. And I think that FX and crypto share in common this sort of like redheaded stepchild syndrome that the regulators globally dislike,
Hmm.
right?
Hmm.
That established financial players really want to see dead,
Hmm.
right? So I
Hmm.
think there's a lot to be said for the similarities that, and if crypto guys are paying attention, they'd be looking to FX for a guidepost of what's coming, right?
Hmm. Hmm. Hmm.
And I think that, so if you look at the experience like FXCM, everybody knows had a big retail business, right, for many years. But actually, one of the biggest business at FXCM was it provided white label technology to lots of big institutions.
Hmm.
So, be it in Korea, in Japan, for a long time until Dodd-Frank came, I think from 2007, 2011, until Dodd-Frank came in the United States, Deutsche Bank's retail business was on FXCM's platform, right? So, like,
Hmm.
FXCM had a lot of these financial institutions as using its platform to conduct their retail FX business. Big financial institutions, and one of them in 2000 started to use us in 2003, or 2002, was Refco. So Refco was the largest retail futures
Hmm.
house in the world. Um, you know, $10 billion company. It was a pretty big business. In 2005, they're trying to go public. Long story short, there was a fraud in there. Like they were hiding, losses from the 90s in some offshore hedge fund, et cetera, et cetera, et cetera. The place blew up overnight, literally just over a
Hmm.
weekend. FBI came, put the guy in handcuffs, and the
Hmm.
place went poof.
Yeah.
What's interesting, it's a big fraud, kind of like an FTX thing. The company goes into bankruptcy. So most of the firm's operations are futures, like half and half. So it was like there was a futures operation. Within 3 months of the bankruptcy, all the customers in futures were safe, sold to MF Global,
Right.
right, which was
Hmm.
the other big futures
Yep.
house. Um, the FX and all the OTC customers were in this, bankruptcy limbo, right?
Hmm.
And I know, if I recall, there was like 100 or even I think almost 200 million of customer funds, the Refco customer funds, and we saw it using our platform. Those customers got 11 cents on a dollar 3 years later,
Wow.
right?
Hmm.
In
Hmm.
because of bankruptcy court, right?
Hmm. Hmm.
And I think, this was like whatever, an estate smaller than FTX. I think lawyers charged this thing like $400 million in like 3 or 4 years,
In fees. Yeah.
right? And
Uh-huh. Uh-huh.
fees and banker,
Hmm.
like, and they sold things and did things. And, there was this huge catastrophe, right? And this repeated itself. We saw other bankruptcies, and every time there was a bankruptcy in FX, the customers completely screwed,
Hmm.
and that's where it's very important, right, that this, because unlike broker dealers in the United States or futures houses, there isn't this legal mechanism that prioritizes these customers.
Right.
So while they should be in this place where there are not general creditors, there is no place in the world where that's true,
Hmm.
right? And they're placed in the general creditor pool in the back of the line with the landlord and the guy who sells them, coffee, machines and whatever. I know everybody wants money, and at the end, this is what happens, right?
Hmm. Hmm.
And I think this is something that you're going to see that in crypto. All the guys that filed bankruptcy, 4 or 5 years from now, people are going to get their money back, cents on the dollar
Hmm.
at best,
Hmm.
right?
Yeah. Yeah. Yeah.
Um, and that is an unfortunate thing. And we're talking about millions of customers, not tens of thousands, right? So
Sure, yeah, yeah. And I'm also thinking about, right now FTX is the thing that's on everybody's mind because it happened recently. But if we go back 6 months, there was the collapse of Celsius Network, which was a crypto lender, so to say, right?
yeah, Voyager,
Which
all of these guys, right?
which sort of started this sort of cycle, and for me, kind of gave me a glimpse. I took a look at some of the impact statements that were presented in the bankruptcy proceedings for Celsius, and these small investors who invested $5,000-$10,000 in Celsius, right? Basically gave them those funds and bought crypto and held that crypto on their accounts. And these people are saying, listen, this is this is money that I was going to invest, but I ultimately need this money to feed my family in the coming months. And at the end of the day, there is no solution for them. They just have to sit and wait, just like everybody else, whether you're a large investor or a small investor,
Yeah.
these days.
Yes, I mean, the problem is the crypto lending business is largely is basically a fraud, right? So the crypto trading business may not be, but the crypto lending business, what they went and promised people 10+% yields,
Yep.
they didn't know where to get those yields. And they were primarily getting those yields by investing in the Ponzi schemes like the Luna, Terra, whatever, all this other stuff, Three Arrows. And when that stuff collapsed, all these lenders were invested in all of the stuff. So I think, I don't want to tell names, but
Sure.
everybody can see it from the news. Anybody who's big in the lending business is basically all done, right? And so you're talking about, enormous amount of brands who are completely finished, in the business. And I think that is, again, I don't say in an absolute sense, but that is largely true where there is not enough of a need by real hedge funds to borrow crypto to short and all that stuff. Because obviously you could just short in the futures markets or in the, in the CFDs or whatever it is, right? You didn't need to go into the cash spot in the spot crypto. And I think that was I think that a lot of it was just people were yield. And I think, like you're saying, the users were very different than like your FX CFD users. They didn't come there to gamble and to try to make turn 2,000 and 10,000 and then, okay, I could lose a 2,000. This is people who said, oh, it's a yield product, right? It's safe. I'm going to give you $20,000. You're going to give me 10% interest. They did not think that money was at risk, right?
Yeah, absolutely.
And that is still going to affect, there's millions more whose money is not yet frozen and will be soon. That I think that's, an unfortunate thing of what's going to happen.
Right. And that was going to actually be my next question. Obviously, we've heard of one of the things we saw was Binance potentially bailing out FTX, right? Obviously, that didn't happen. I believe I saw some other reports of, again, smaller firms, smaller exchanges thinking about, or again, in talks with other firms who may potentially bring in a large investment in just to basically keep things flowing, and keep some exchanges or some companies afloat. I've heard you say that that's a stupid idea. We shouldn't necessarily do that. I guess I want to know kind of what's your thinking or reasoning behind that.
So the way, if you think about, right, if you're an investor with money right now, right, buying a crypto broker is essentially buying a falling knife that you do not know where the price of the asset, like you do the Monte Carlo simulation. What happens to any of these people when crypto is 3,000, when Bitcoin is 3,000, Ether is 50?
Yeah,
it's who survives this, right? So like if you're an investor, you have to ask that question, right? And I don't think many people survive that level, right? So and this is if all the books were kosher and all the everybody was regulated and knew where the money was, which is obviously not the case.
Not the case. Yep.
Not the case at all, right? And most of these, because all of these are non-transparent, we don't know if Binance or any of these people are really alive, right? What's the state of their, is just because they haven't had a run on the bank yet? I mean, like what are they really solvent? We're not sure, right?
Right, correct.
And if you look at the proxies that you can tell, volumes are way down. So anybody who was bleeding money before is bleeding more money now, right? Anybody who is obviously not just volumes are down, but the price of the coins are down. So the dollars earned per trade and commissions is down, right? Per trade, right? So you're talking about revenue declines are pretty substantial, right?
Yep.
And that's before balance sheet problems or anything else. So my whole view was, if you're in that business, the likelihood you raising new money that's coming up outside of the ecosystem is almost zero, right? Because very few people are going to want to catch that volume. And if you're in that business now, instead of spending money rescuing somebody else, make sure you stay alive,
Correct.
right? Because what we don't need, as you know, like, think about what happened if Binance all of a sudden said, "Oh, by the way, yes, we were talking, but we were the same as FTX, or nearly the same. We have a shortfall, not 8 billion, but like, 2, right? Like, that's it, right? And you have that in, Genesis, and all these other players are in trouble, right? Like, all these players need to now sort of make sure that they're afloat, that they don't fall apart, not to try to rescue something else
Someone else.
that will fall apart. And I think that, because that's the real risk for the industry today, is that what happens if this dominoes keep falling, right?
Yeah, right.
And like, if you were in this business, right, and you needed to hedge, right? So you're a broker, you get trades, you need to put them somewhere. Who are the biggest counterparties in the business? Most of them are now in question if they're going to be here or not, right? And
Right.
people are hoping that Binance is going to stick around. There, nothing to me says Binance was doing anything different than these other people. And I'm not talking about the fraud, the
I understand.
business practice wise. They're in the lending business, they're all that stuff. There's no way they're not sitting on massive balance sheet losses from the lending also. There's no, like, and if they go out of business and some of the other big guys go out of business, I mean, the industry is in, how do you come back from that trust? Because now you're talking about millions and millions of customers
Yeah.
being gone, right? And so if you're Coinbase or Binance, or it's like, the last thing you need to do is worry about somebody else. You first have to worry about yourself, right? Because crypto is only going to come back if a year or two from now, you're going to have people whose account is at a brokerage firm, they're still trading and everything is fine, right? And it's gonna be a show me, right? No longer,
Sure.
I believe, this is gonna have to be a show me. And I don't know who yet has not pulled money from all these places, but most people are going to, right? As more dominoes fall, people will, I mean, why
I
would
would
you
think
risk it?
so. I would think so.
Yeah,
I personally would if I had money in one of these firms, of course.
yeah.
Another question, I guess. Well, this is sort of like a multi-pronged question. On the one hand, it's a regulatory question. The CFTC, NFA, whoever, like basically all the regulators in the United States who are responsible for regulating markets, including the IRS, who's responsible for taxes. Up until now, again, they have not come to uniform agreement or on whether or not it's a security or a commodity at this point. And I've talking I a lot of my guests on podcasts and interviews, I asked this question, are we really going to see a push to get solid regulation on the books in the US, or are they going to be even more confused now because this FTX situation is so complex in the sense that there was so many moving parts, there's so much contagion right now that I think they're scheduling hearings in Congress already next week. That's great, but when are we going to see sensible regulation? We're way behind. The US is way behind Europe and places in Asia who have had their stuff together in terms of sensible regulation for a couple of years now. So I guess my question to you is, what do you see crypto like in 10 years? I guess maybe from a regulatory perspective in the United States, but also maybe from a market and price perspective. Because I think I saw somewhere, correct me if I'm wrong, that you commented somewhere that, right now Bitcoin was floating at around like 16,000. And from your perspective, you were like, really, the price right now should be around $16 and not 16,000 or something like that.
Well, no. So I was saying, from a bullish perspective,
Mm-hmm.
if there's a run on the bank and everybody's selling, right?
Mm-hmm.
If there wasn't a true use case for crypto, which I believe there is,
Okay.
right?
Mm-hmm.
And Alec can explain that a little further, but the why isn't the price $16, right? If everyone's pulling money out, and
Hmm.
it's all speculators, the price should be very close to zero, right?
Right. In terms of market dynamics and
Yeah,
everything else, the things that we know from the fiat markets, right?
correct, right? So like if and for any asset where loss of trust was so dramatic, prices should be cratering way harder than they are now, right?
Yeah.
Um, and one of the optimistic long-term things for crypto is that they're not, right? Is because there is this, I think, specifically third world payment demand that, crypto has kind of all the places that rely on black market dollars, crypto is taking a lot of market share, in those
Okay.
countries
Hmm.
because of banking regulations made black market dollars so difficult to do that basically
Hmm.
crypto has taken that. But how do Russians get money out of Russia right now? How do Chinese get money out
Sure.
of China? If you live in Lebanon, how do you do something? Egypt,
Hmm.
Argentina, Venezuela, like you name the country
Hmm.
where it's really difficult, right? Africa, places in Africa, places wherever. You're talking about a lot of places where crypto is very relevant, right? Not for Americans or Germans or something like it's not at all. It's a speculative asset. For other people, it's
It's a
basically the
means of
best
it's a
gateway to
means.
US dollars that there is, right?
Yeah,
People
yeah, yeah.
think that, oh, it's a replacement. It's kind of a replacement in lieu of the fact that you're restricted from US dollars because of,
Right.
you're Pakistani and you work in Europe and you're trying to send money home. Good luck with that right now.
Right.
Terrorism watch lists and all this stuff. You can't send money to Pakistan, right? And crypto just serves that purpose, right? And I think that that is a huge, element, right? So,
Okay.
but anyways, to answer your regulatory,
Hmm.
I think regulators kind of there's three threads to regulation. I think one thing that people don't appreciate is how many regulators, especially in the US, are now saying under their breath,
Hmm.
thank God we never regulated this thing. One, so all these disasters are not on us. Okay.
Uh-huh.
And two, that if you think about effectively speaking, because it wasn't regulated, most large financial institutions never touched this thing. So the
Hmm.
blast zone from all this destruction, assume Binance and everything collapses, right? Like all the big players in the ecosystem go away right now, right? The next year until
Hmm.
the Rana Bank forces them out, right?
Hmm. Hmm.
Essentially, nothing happens to any of the banks, right?
Yeah.
Nothing happens to any of the big like Charles Schwab or E-Trade or Barclays or you name the
Right.
bank, big European, big US bank. They don't have any exposure. They don't care. They're like, oh, look at
Right.
this slow motion train wreck. Fun
Hmm.
to watch, great headlines, good for the journalism business, you know, uh, but not really a problem for Goldman Sachs,
Hmm.
right?
Right. Right.
Whereas,
Yeah.
if there were some regulatory things that made banks comfortable and banks were in this thing, and then this happened, right?
Hmm.
Oh boy, right? Oh shoot, now people be writing off loans, there'd be contagion, there'd be real problems, right?
Yep.
So I think there's a big, you know, camp in regulatory land that says, no, let this burn, and screw that. We don't want to do this, Mind you,
Hmm.
these are civil servants. This is these students at school that never wanted to work, never did their homework. That's why they went to work for the government. So when you go say, oh, go regulate this, learn something new, they're like, what? No, learn something new over my dead body, unless forced to by legislation. Nah,
Hmm.
right? And so I think that's thread number one. I think thread number two is most US regulators, and I don't think people pay enough attention, don't need regulatory jurisdiction to have enforcement jurisdiction. So both
Hmm.
CFTC and SEC can claim fraud universally and say, oh, if it's termed fraud, which is a very broad thing,
Okay.
right?
Uh-huh.
Can include like inaccurate advertising or like you can claim fraud, like a
Sure.
lot of like fraud is a very
Hmm.
wide not in the criminal sense of what people think of fraud, right?
But in terms of
You know,
the actions that were taken, and
yeah, so
then
they can
described
go
as
and say,
fraud.
oh, this is like civil fraud, which is a super broad term, and
Hmm.
then from a regulatory perspective, and then go after people anyway.
Hmm.
And
Okay.
they don't need to. So, like the SEC will say, all of these are unregistered securities. So you have committed like securities fraud. You've sold securities without a license.
Hmm.
So they can just go do that selectively, go after anybody they want. Now, they're loath to do this, generally speaking, because regulators, especially in the United States, and this also in Europe, when someone's under their jurisdiction, they don't need a judge, they don't need evidence, they don't need anything. Like they go, they do their own investigation, they deal directly with the company. Most people need the regulators, so they can't fight it, so they have to settle. Right? You
Hmm.
can't be in a fight with your regulator that's really, bad, right?
Sure.
Crypto, because they don't have jurisdiction, they have to go to a federal judge and say, oh, we have evidence and proof that this is going on and we need to stop it. They're not used to doing that's a level of work that only the Justice Department is used to. And it takes
Hmm.
them 5 years to go do
To
something
build
small.
a case or
Yeah,
whatever,
to
get all
do
the
like now they
documents
need evidence.
together.
They don't do that. Like in real regulatory land, they don't have that burden of proof to worry about. They go and they say, we don't like this, change it, we're fining you for it. Let's negotiate the amount. Like
Hmm.
end of story. There's no such thing. They don't need. They have their own tribunal internally. There's no
Hmm.
judges. There's no legal protection for the firms that are
Hmm.
in jurisdiction.
Hmm.
Right? Theoretically, you could appeal to a federal judge, but that's after you're guilty. So
Yep.
everyone's already
Yep.
cut you off. You're fucked. So
It's happened countless times in the FX space
right, countless times, right? Like, and there's a reason why there's only like three FX brokers in the
in
U.S.
the US.
But even in other countries, right? In the jurisdiction, you can't fight the regulator. If your regulator says, "I want you out," you're out, right? So here, the regulators has to do work, right? Which they have been low. That's why they haven't done it because they've been loath to do this work because again, they're too lazy. But if Congress pushes them, and people think, "Ooh, I can be a famous politician if I go put some crypto people in jail." There's a blueprint for this, and
Hmm.
you will get absolutely lots of enforcement cases without regulation. You'll just get enforcement cases,
Hmm.
right? If people think, oh, there's a worthwhile, if SBF becomes the next Martha Stewart, it'll be worth, to put in jail for the press of it. Um, like you can, that's easy, right? They'll do it. They'll do that. And the third leg of regulations will actually be legislation.
Hmm.
Excuse me. I think that's a question that will be solved once they figure out they want it. And I think, like I said, I think there's a strong camp in the states that's going to say, I don't want regulations because regulations will cause this thing to be, um, uh, accepted.
Hmm.
Right. And I'll give you an example. We in FX in the States, we spoke to regulators about uh, trying to put FX customers on the same footing as futures customers, legally speaking, right?
Hmm.
So they're ahead of other creditors in the case of bankruptcy,
Hmm.
and the regulators had no interest to go and lobby for this, right? But that would protect customers. You would think that that should be a lobby, right? But
Yeah. Yeah. Yeah.
no, no, because they didn't want to give the legitimacy to FX,
Hmm.
right? And so they rather see the customers burned than to give the industry legitimacy. And this is going to
Understood.
be the same problem. Like you're going to see, and there's a lot of people behind the scenes that, like if your securities and futures are going to say like, well, why should we? If customers, US customers had the same rights as securities customers, there'd be SIPC protection up to $500,000 from the
Hmm. Hmm.
government. They'd definitely be first in line to receive any recovery, right? There'd be no such thing as, other creditors come first. like you're not like look, there's this enormous difference here, right?
Sure.
And I don't think that this is going to be so easy. I think people think its regulations are coming. Maybe
Mm-hmm.
I think enforcement cases probably are coming,
Okay.
for sure, almost.
Mm-hmm.
But
Mm-hmm. Mm-hmm.
the regulations, it's going to be a debate, and it's going to be an interesting. And if it comes, it will not be like what the Europeans are doing. Europeans are doing, here's a framework where you can fit in, and it's like relatively decent and light, right?
Mm-hmm.
And to meant for the industry to still exist and breathe. I
Yeah.
think if regulations came in the United States, it would choke the life out of the majority of players that are in the States, because it would be do so on purpose.
Mm-hmm. I see.
Just like US regulations in FX. They came and, to choke the life out of most players who didn't have the money and the wherewithal, to go put up the money for this. And this is going to be not just happen in retail FX, happen in derivatives too. Dodd-Frank
Mm-hmm.
booted most foreign banks' derivative operations out of the US. This is for institutions only,
Mm-hmm.
right?
Mm-hmm.
And, you went from being a US customer in 2006, you could go and get a price from 30 or 40 banks in interest rate swaps and CDS and all this stuff. And post financial crisis, post Dodd Frank, right, you could get a quote from four. So shockingly,
Uh,
the spreads, went a little wider by a lot,
mm-hmm. Mm-hmm.
and all those remaining players, JP Morgan, the big US banks, who thought they were going to be the ones most hurt by Dodd Frank, turned out to be the biggest beneficiaries, right?
Because all the
Because they were the
business
only
went to them.
survivors,
Yeah, yeah. Uh-huh.
So they went from lobbying for Dodd Frank. And then I don't know if you recall, when Donald Trump was elected,
Uh-huh.
he was hearing all his banker friends for years saying, "Oh, Dodd Frank is terrible. Repeal it, repeal it."
Yeah, yeah, yeah.
When he was
Right.
elected,
Yeah.
he was like, "Oh, I'm going to repeal Dodd Frank." Everyone's like, "No, no, 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 don't do that." Like, and then shockingly was not repealed.
Mm-hmm.
And he wanted to repeal everything that Obama did, right? But he couldn't
Yeah,
do
yeah,
it
yeah.
because even Republican legislator got, the calls from the banks that says, "Well, no, yeah, we were bitching about it before, but we kind of like it now because essentially it's the world's greatest protectionist mechanism, right? For large institutions to force out small institutions out of their business,
Mm-hmm.
and if crypto regulations come, it will be very similar. I think it would be meant when a few big guys will get the business and nobody else will qualify.
Mm-hmm.
Um, that's how I see U.S. regulations, because any sort of like regulatory light that would understand how the structure of the market works and fit within it, no way,
Mm-hmm.
right? Because it would only serve to tempt mainstream institutions to get into it, and the regulators don't want that,
Right.
And I think that that's a real interesting thing. And I think even regulators overseas are now going to have to rethink, if all of these dominoes fall, like I think they're going to fall,
Mm-hmm.
a lot of people that gave licenses to all of these dominoes are now going to be like, we kind of have eggs on our face. Should we
Yep.
be doing this? Should we be doing a much stricter job, right?
Mm-hmm. Right.
On,
Mm-hmm.
are these licenses basically were a biz dev opportunity, not a
Mm-hmm.
real license,
Mm-hmm.
or an economic, sort of attract businesses to particular places. And
Mm-hmm.
I think people will rue the day when that was the case, because unfortunately, when customer money is at stake, and I'm the last person to like regulators, but like when customer money is at stake, you just need it because there's just too much incentive to steal it.
Sure.
Oh,
Mm-hmm.
and most people that steal it didn't end up beginning it to be like that. They didn't pocket it on purpose, right? They
Mm-hmm.
just
Mm-hmm.
didn't account for it right. They spent more on, than they took in. They didn't really see. They borrowed temporarily, and then it ran away from them, and they had doubled down on losses until they lost everything. And that was the case in almost every time that I've seen this stuff happen over the last 20 something years of my career, it's
Hmm.
always been that. It's never been like, oh, not never, but almost never someone set out to steal money in the first place. But that's why the
Hmm.
regulatory framework is so necessary. And when it comes to this stuff, it needs to be very strict. And unfortunately, I don't see that's not there yet anywhere,
Hmm. Yeah, I agree
right?
with you. Yeah, it's just not. It's just not.
And
And
so and a lot of people are alive because it's not there. And I don't think most of the players in the industry have the balance sheet, the discipline, the systems to survive if
to
that
survive.
was regime came into place.
It's interesting, your last point. SBF has been on this sort of media journey the last 2 weeks, and he's saying exactly what you're saying. This wasn't intentional. I didn't try to divert customer funds. It's just it got away from me. There was too many things going on. There was short-term lending, as far as I saw. There was short-term loans made from either Alameda to him personally and a couple other executives or something like that, but for very hefty sums of money, which to me personally raised questions in my head, like, what do you need all of the couple of $1 billion for in terms of a short-term loan, but in terms of a personal loan? But anyway, that's something that we could
Well,
discuss.
that's why in his case, and I think in the cases of things like this, you're going to see he's too high profile a target not to someone want to make their career, to
Yeah,
be,
right. Like you said
to
before.
put
Yeah,
him
yeah,
in jail,
yeah, yeah,
right? Because there's
yeah.
just going to be a lot of people who are going to want to make their political career doing that.
Hmm.
So I think the next governor of who knows, right, is going to be the guy, who's going to put SBF in prison, right, and
Yeah,
going to
yeah,
be able to sing about it. And I think
yeah,
that I think that's because of that, right? Because when you live and take all this money, it's very hard to say that it wasn't deliberate.
Yeah, makes sense. Drew, I wanted to shift gears, talk a little bit about TraderTools. So I think you joined TraderTools as an investor in 2018,
19, yeah.
19,
Yeah, basically the
and
end of 18, the early 19, yeah.
so early 19, and then today, I mean, again, I introduced you as CEO, so you've taken on an executive role and a leadership role at the company. Can you talk a little bit more about how TraderTools came about? I know you have tons of experience running retail brokerage and institutional forex. You're very well versed in that. Is this something that came about as a sort of analysis of kind of, it's 2018, 19. Okay, so what are all the FX shops doing, and are they still sort of stepping on the same sort of, are they still seeing the same problems and dealing with the same issues that they've been dealing with, over the course of the last 10, 15 years, and sort of that's where TraderTools came in, or is it something else that kind of brought about the company and the services and the products that you guys have launched?
Yeah, so I think a lot of this is if you look at sort of the two market segments of Trader Tools services, one is regional banks and the other is retail FX brokers, right?
Okay.
So if you look at regional banks, they basically, in the world of the phone, pre 2000s, okay, the world of
Hmm.
phone trading,
Hmm. Hmm.
when you asked for a price and you wanted to get, you were, IBM or Siemens or, someone like this, right? And you wanted a price, you call your 20 banks that you have a relationship with, you get a price from each one, right? And you essentially, pick the best stuff and you trade it, right? The world of electronic trading essentially ushered in those who invested a lot in technology won that race, and what you saw was, and in a financial crisis, accelerated that winner take all mentality of not just the people who invested the most in tech, but the people who had their act together, recovered the fastest after the financial crisis. And what you saw was over the last 20 years is that FX became heavily concentrated and a few large market makers control a huge portion of the FX trading business in the institutional business.
Hmm.
And then most of the regional banks essentially became price consumers. They marked up, they took JP Morgan, Citi, to Goldman, and those prices. They marked them up to their users, and that was it, right? And they had small scale businesses, and they didn't have a big business anymore. And so what happened was the big guys were taking everything away, right? And we thought, no, but now you don't need 20-30 million dollars to develop this big market making, technology. Now we can
Mm-hmm.
deploy this very cheap solution that would be very cost effective. And if you had a relatively small scale business that was only like $500 million a day or $1 billion a day of volume, you don't have to have 50 billion,
Okay.
and you can run a real market making operation for your clients and give them better prices and make more money on the trades.
Mm-hmm.
And this is true market making, not what most retail FX brokers kind of be booked and bucket the trade.
Uh-huh.
So this
Uh-huh.
is real market making. And I think that we have that's going to initial success of our product called Price On was we basically built this market making HFT in the box, right, as a commercial software product, and
Mm-hmm.
are deploying it initially to regional banks so they can do their own market making and not
Okay.
rely on the big banks,
Mm-hmm.
to
Mm-hmm.
do that, right? So not be just a reseller of big bank prices.
Mm-hmm.
Um, and we took, for example, our initial success with some of banks in Europe was we took banks who were basically, one for one, every customer trade they did, they hit a big bank. They
Okay.
went through to 70% now. They either internalized, matched customer A to match customer B, and that was
Mm-hmm.
a small percentage, like 10 or 15%. And then the rest of it was passive orders. So they went and actually made markets in institutional business to match against.
I see. Okay.
So they went and they got a buy euro from their customers. So they sold the euro as a market maker on Fast Match or one of these ECNs or
Mm-hmm.
some other client. And then essentially they didn't have to go and hit a price from Citibank or something like that, right?
I see.
And
Uh-huh.
that I think we are trying to take that business and also go to the retail brokers and say most retail brokers know A book where they agency everything,
Mm-hmm.
and they know B book where they bucket everything, and there's no middle, right?
Sure.
And the reality is most of the stuff that's A booked can do what we say is a hybrid true market making, where you could not take a lot of risks, but basically benefit from the spread, not just a small little markup like you would in an A book.
Mm-hmm.
And so
Mm-hmm.
we can monetize people A books about 5 or 6 times bigger than they do today, right?
Mm-hmm.
Without taking B book type risks. And at the same time, so for example, it depends on the currency pair. So if you're B booking in retail terms, meaning you're bucketing trades from in small spread currencies, you're a dollar yen, stuff like that. Will you make the same amount of money at TraderTools using a TraderTools technology? No,
Mm-hmm.
because bucketing would work better. It would be uneven. It would be you would have highs and lows depending on volatility,
Yeah, yeah.
but over the course of a year, you'd make more money. But in wider spread currencies, not just emerging markets, but even in Canadian dollars or New Zealand dollars, like where there's real spreads,
Mm-hmm. Mm-hmm.
capturing the spread is just as good as the B book from a P&L perspective.
Mm-hmm.
And what people are seeing is they can get A book type stability in terms of volatility of earnings
Mm-hmm.
with B book like earnings on a portion of their book,
I see.
right? And
Mm-hmm.
if you can get A book like stability and predictability, right, with essentially B book like earnings on a portion of your book, that is a material big difference, right? And a better option to A booking and a better option to B booking, again, higher spread currencies. And I think
Mm-hmm.
that's something where and if you look at like emerging market currencies or really widespread currencies like Scandinavian currencies, things like that, we would actually capturing the spread would outperform the B book 2 times or 3 times.
I see.
Um,
Interesting.
this actually becomes even more necessary as we get into next year and carry trades become a big issue,
Okay.
right? And
Mm-hmm.
so, if you look at like the big changes that's coming over the next few years is a lot of your present winners in the business, right? They are essentially be book as much as possible, offered the unrealistically good trading conditions, right? No rolls, crazy leverage, all of this
Mm-hmm.
stuff. And
Mm-hmm.
the user is a big beneficiary of it. That's why the user goes there. User is not stupid. You say, really? Okay, why do I pay rolls? This guy says no rolls. That's
Mm-hmm.
awesome,
Mm-hmm.
right?
Mm-hmm.
That is a rational choice to go and trade with the guy with no rolls because that's just a cost that eats at you for no reason.
Yeah, of course.
But next year, and you're already starting to see it now, you're starting to see currency pairs where the interest rate differential actually people say, wait a minute, I actually want the rolls because I get to,
Yeah.
to actually
Yeah, yeah,
benefit from this because I want to do the positive carry trade, right?
yeah.
And now I think there's going to be a demand change where people who offer, you know, uh, roles to clients are going to see a big influx of users
Mm-hmm.
who are coming for different reasons. And what most people forget, and being old, this is an advantage, is that pre-financial crisis, the majority of FX traders traded FX for interest rate purposes, not
Oh, I
for
remember. Yeah, yeah.
alpha
Just
purposes, right?
just
And
buy dollar yen and sit on it or whatever it was, and
right,
just
so
yeah.
people, you could buy dollar yen was a 6.5% interest rate differential. If you
Mm-hmm.
take away sort of the VIG that brokers put in there, you would really only get like 5%. Okay.
Yeah.
So, but you did that at three times leverage dollar yen, you got a 15% a year yield.
Mm-hmm.
2 times leverage, you got a 10% a year. And if it was, um, I remember like Kiwi was 8%, right? So it was, you did that Kiwi 2 times. That was a big, so even institutional business, that was an enormous amount of funds that were doing this, right?
Mm-hmm.
And
Of
in
course.
retail, this was a huge business, not
Mm-hmm.
just in Japan where this was kind of pioneered, but everywhere in the world. And this became a massive source of trading. And I think that it will be so in the next 2 years. I think it will turn into a big thing also. But to
Mm-hmm.
do that, you cannot be booking these trades because you're paying out interest every day, right? In large amounts of it. I remember in '06, just to give you an example, FXCM was paying out to its users, okay, $800,000 a day in
Wow.
positive carry. If you
Mm-hmm.
didn't hedge that, like you'd be bleeding eight hundred
Oh
thousand
yeah, of
dollars a
course.
day,
Mm-hmm. Yeah,
right?
of course. Mm-hmm.
And I mean that's nuts. And obviously, financial crisis eliminated that to zero. We weren't paying; we were like charging, $50,000 a day or something. That was it. It was like spreads were like this. The
Mm-hmm.
interest
Yeah.
rates
Yep.
were like this, right? But
Mm-hmm.
before that, I mean, this was a big thing, and I think that's something once it comes again, this is where market share could shift and
Uh-huh.
different brokers who adapt will see it grow, brokers who don't adapt. It's kind of like the old school brokers like FXCM and Saxo, people like that did not adapt to the new world of zero interest rates, as well as all these new guys who came in and said, why do we need these stupid roles? They're just this archaic, ridiculous, functionless things, right? And it will just be a cost. So we'll pay a little bit,
Right.
but it's worth it for the user. And it's a tax on us as a broker by a few percent. It's nothing, right?
Mm-hmm.
So they weren't purists about it, right? And they benefited a lot from this thinking, right? And actually benefited their users. That's why it benefited them.
Mm-hmm.
And I think that that's about to reverse on itself
Uh-huh.
and say, well, what happens when the user said, no, 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 I want the role because
Yeah.
I want this now meaningful interest rate thing. And that's why I want to trade. And
Uh-huh.
I think that, you're going to see less leverage used, more winners, more large moves in the market because there is be these large concentrated positions when they unwind, it will
Yep.
be. big moves in the marketplace. So I think in general, this could be a very much like I said in the beginning, the golden age for a lot of brokers.
Hmm.
You just have to adapt. And I think that our solution at TraderTools is going to be ideal for people to manage this, and do this well, right?
Hmm.
And so I think that people have kind of stuck to this B-book only and B-book and A-book sort of methodology, and it is not an optimal strategy at all.
Hmm.
Um, and this is something that we think we sell a very fairly cheap solution that anybody, even smaller brokers,
Can
can
afford to use.
uh, and again, regional banks. This is the beauty of we initially did this for regional banks, and very much I think we've had some decent success with this, and we think that this is something that more people will adopt. I think they'll see that there's a lot more there, and I think it'll also mean a world where there's more real market makers.
Hmm.
Now you're turning brokers and regional banks back into true institutional market makers, because as they use our software to make passive orders into the institutional business,
Hmm. Hmm.
a greater variety of market making being done in that business, and not so focused in just a few players.
Sure. Right. 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 Yeah, that makes sense. That makes sense. Of course.
And it's not, you're not going to go and compete and replace Citadel and XTX and JP Morgan. Those guys are still going to be the top of the heap, and
Yeah.
they're
Yeah. Of course.
are going to be always on, and things that our customers could never replicate.
Hmm.
But when you have inventory to move as a broker, and you can move it passively through instead of going to pay spreads,
Hmm.
that is going to be a big advantage. And that's going to be an advantage not just for you, but it's going to be a very large advantage for the market as a whole, right? To have a much wider variety, and it'll be more stable. The FX world will be more stable that way. And I think there's enormous amount of need for this, because we spent the last 25 years really shrinking every year the number of true market makers who are really taking risk and really making prices out there. And the concentration is such, it's very unhealthy for the business.
Hmm.
And I think this kind of to try to bring the force into balance type of thing.
Hmm.
Um,
Yeah, yeah. No, it's very cool. I think it's like, considering everything you said in terms of what we could expect next year and just in the next few years going forward, it sounds like the price on software essentially lets you kind of find the low-hanging fruit, so to say, and see what you're kind of where you're not capturing revenue where you could because you're still sort of stuck in your traditional A book, B book setup from the old school days,
right.
so to say.
And if you look at even like crypto is a different issue, right? If you could spot
Yeah.
crypto, you are dependent on these external market makers with dubious
Yeah,
standards
that's a
and
different story. Yeah, that's a
right,
different story. Yeah.
and counterparty issues. And by doing some of your own market making, you're going to lower your risk profile. You're going to be able to actually guarantee your user the spread like you couldn't do now. You're going to be able to actually have much better execution. And if regulations do come to crypto,
Hmm.
the crypto brokers are going to have to actually pay attention to best execution and all of these things and standards. And if you look at who will be left at the end of crypto winter trading crypto, will be very much hardcore traders only, right? The amateurs will
Hmm.
be gone,
Hmm.
and those people are much more um, execution cost sensitive, and
Yep.
even crypto brokers have to start paying attention to this issue, which most have not, because they're used to, okay, there's a 20-year-old who thinks he's going to put all his money in this and be a millionaire tomorrow, and he's not paying attention to the execution costs and his little details. He's only paying attention to which coin he's buying, because it's all a lottery ticket, right? And
Hmm.
those traders are gone, right? And that's,
Yeah.
the longer this continues, the more you squeeze out of them, and the more you get, you squeeze out those players, and when you get serious people that care about all these little details. And so I think you're going to see, even in crypto, an adoption of more professional, principle-based trading, because they just are going to have to.
Hmm.
They're going to have to comply with real execution, clause and demand, even without regulations, by their customers for better, cheaper
Hmm.
execution.
Yeah, yeah.
Right.
I totally agree with that. Yeah, of course. Drew, before we wrap it up, is there anything else you think we should think about in terms of themes for next year? I know we talked about, volatility, carry trades, interest rates, geopolitics, obviously are going to continue to play, looks like are going to continue to play a major role. I heard in London, for example, where we both were at the London summit, one of the things that some retail FX executives told me their focus next year is going to be a lot on risk management. I'm assuming they're talking about, in terms of volatility and how unpredictable some market moves were in the last, year or two. Would you agree with that sentiment? And maybe, you have some other thoughts on sort of what we should think about as we go into
Yeah,
2022?
because if you think about this whole crypto blow up, right, and some of the stuff that's happening, the thing is, we have lived now 12 years with zero interest rates. If you looked at the world,
Yeah.
the Western world is actually, its entire economy is kind of warped, because you had
Hmm.
12 years of decision making where funding for prime customers was zero, right? And
Yeah.
so what do you do when money costs zero? Oh, you go buy stuff. So real estate is way too high,
Hmm.
crypto is just an asset, right? So crypto prices were high because of all this money that just went looking for yield, looking for somewhere to get away from zero, right? As you reprice safe money, right? So think about right now, you could buy a 1 year treasury at like 4.5%. By next year, that's probably 5.5%,
Hmm.
right?
Yeah, yeah, right.
So if risk-free money is 5.5%, the whole world has to reorient,
Hmm.
right? So you're going to see lower asset prices, lots of, air going to flow out of a lot of bubbles.
Hmm.
And so I think from a risk management perspective is who your counterparties are. I think if you're in crypto, that is the one most terrifying thought you have is, do the people I have a deposit with, are they going to be around tomorrow? And, am I going to fall because they fall? Right. So I
Hmm.
think it's one of the biggest problems. Right.
Yeah.
And like, I think if in FX, what happens to the financial system, stocks, bonds, all of the stuff as the air comes out of it, and so far it's been fairly orderly declines. I mean, that's been a miracle. It doesn't mean it's going to stay that way, right? Like
Sure.
some point, like you're going to see some real hard falls, real estate, other things that what dominoes at those things. So I think you're going to see a lot of volatility. I think you're going to see, this is going to be a slow moving recession because we have so much stimulus that kind of is
Yeah, yeah.
propping up,
Hmm. Hmm.
right, the system, right? Not just monetary stimulus, but fiscal stimulus, support payments.
Sure.
Like in the United States, you have 45 million people not paying off their student loans for the last 3 years
Right, because of right. Yep. Hmm.
because of this thing. So what happens
Hmm.
when they have to, like,
Hmm.
La La Land will be over someday, right? We are still living in it. But when
Hmm.
that happens, like there's all these lots of different things when they go on, right? Think about the knock-on effects. Investors aren't going to put free money, big checks to all these loss-making companies. How many loss-making companies you have? So there's enormous amount of air going to come out of the system, and there's no way that comes out without, like, it'll be a miracle, right? If that comes out without blowups to God knows who was dependent on this. And so far, we've seen only peripheral blowups, right? Crypto,
Yeah.
tech stocks, the loss making, the
Yeah, yeah.
Zooms and
Hmm.
the
Hmm.
Carvanas of the world, right? Like
Correct.
we've seen nose deflations, right? But we've not seen, but people have to remember 2008 financial crisis started in 2006.
Yep.
Subprime mortgage blew up. Like
Yep.
it took a long time. It doesn't happen overnight
Overnight. Hmm.
that Lehman collapsed, right? Lehman was just deep, that straw that broke the camel's back, but it took
Hmm.
2 years of the tidal wave that started subprime mortgages, subprime auto loans, and all this stuff to come to 2008, and there wasn't even close to the support payments that and fiscal buttress that you have now. I mean, and who knows, right? But so I don't can't predict this stuff, right? I'm not an
Sure.
economist, but if you look at that, you should be thinking about risk because you just don't know where that's going to come. And
Hmm.
hence, I also think that's why FX is going to have such a good time.
Right.
Because when
Yeah,
the
yeah,
world is
yeah.
burning, FX usually is,
FX is usually doing well. Yeah,
is
of
doing
course.
well, right? And
Yeah.
as it was last time, right?
Hmm.
And
Hmm.
it shouldn't be any different today, except if you're exposed to stuff that is, or you're on the wrong side of a big move, and
Hmm.
I think that
Hmm.
that's where paying attention to risk management is very important. This is why I think our product at TraderTools, I think, is kind of one of those things that will help people kind of manage through a lot of those issues more cleverly than before, because people have to look at life. Life is about to change, right, in many ways because of
Yep.
rates, because of volatility, in ways that it hasn't been the case, right?
Hmm. Hmm.
But so I agree, risk is going to be a big thing, and you know where it comes from, you know,
We'll see.
I have no idea, right?
Hmm.
Like, and no
Hmm.
one knows, and even in 2008, no one thought that it was going to come that way, right? People saw problems in lots of places in finance. I don't know if people recall, but like in August of 2007, all these Japanese carry trades, right, where everyone was long Aussie dollar versus yen and Kiwi versus yen. There was a massive, I don't remember which day in August, but it was like a 10% decline in those rates in like 20 minutes or half an hour, some crazy amount, right?
Hmm. Hmm.
And it was this huge unwinding. This is Goldman Sachs Asset Management at the time was unwinding, and other people. I remember we
Uh-huh.
had these massive positions, right? And our customers were unwinding billions, right, of positions in this on this day. And I thought that was the first time it hit me. Oh, the world is changing. Like something is going on. And actually, there was like headlines, oh, there's a huge crisis and finance is in trouble and all this stuff. And then it died down and nothing happened. And the stock market reached a new high in October of that year.
Okay. Yep.
Before it,
Yeah. Before
and
everything
6 months
else. Yeah.
later there
Before
was
everything
bear
else.
stearns and it became a little more apparent what was going on. But we're having these little hiccups.
Hmm.
We have yet to connect it to a real place where a blow up can happen,
Hmm.
right? And we're
Hmm.
hoping, obviously, this day and age, the banks are safer than they were before, and it doesn't. It's not going to look like 2008 again,
Yep.
right?
Hmm.
But
Hmm.
whatever will happen, there is going to be an issue, right? And I think you know, there's better, more qualified people who need to guess where that's going to be, but this looks very eerily similar, right? And generally speaking, trust the experts has been proven to be a bad call in the last 100 years. And generally the people who are unwinding, bubbles, like they have no control over how bubbles unwind.
Hmm.
If it
Hmm.
unwinds well, I mean that would be again, that it goes against historical odds that bubbles unwind well. So I think it's good for FX overall. I think it's just a thing that people are going to have to really button up, what what they're what they're doing. Like I give you an '07, '08, um, in our industry, FX and index CFDs, all this stuff, that business was just booming. It was just the most amazing time.
It was. Yeah.
FXCM had like a 60% profit margin. It was like, I never made so much money in my life. And the, and it was all, we didn't do anything crazy different. It was just all the preparation we did over the years kind of led to those moments, right? But
Hmm.
if you look at what did blow up a lot in 07, 08 was all your single share CFD. There was a lot of your single share CFD businesses
Okay.
that were destroyed because so many stocks went from 50 to
They went
3.
belly up. Yeah, they went belly up.
And so even if you have 10 to 1 leverage or 5 to 1 leverage, when the stock goes down 95%,
Nope.
anyway, big stock, banks, big construction companies, it wasn't just little .com companies. There was massive amounts of destruction of those businesses. And so like there's always been, even in our industry, there was a lot of issues.
Hmm.
Um, that happened in Australia. A bunch of brokers blew up in London. There was some pretty famous players went through some pretty harrowing rescues, to
Yeah.
survive those days. Like it's a real, those are the kind of things. And if you look at single share CFDs, they've been kind of the heroes for the industry for the last 10 years because that's what's been booming,
Hmm.
right?
Yeah, I would say.
Because
Yeah.
of the fact that that's been the low vol place that attracts traders, right? The stock market's
Yep.
booming, so single share CFDs are booming.
Yep.
That potentially is definitely a place where that's going to be, people may regret having so much exposure to single share
Well,
CFDs.
we'll see. I mean, some of the feedback that I've gotten from well, specifically CFD brokers who are offering single stock and fractional shares, which are super, well, sort of super popular these days.
Mhm.
Um, some of the sentiment that I hear from them is if they're also offering OTCFX, some of the traditional stuff that we're used to, it's popular, but it still accounts for a pretty small share of the overall pie if you look at it, on a quarterly or like annual basis for some of these firms, which I get it. I mean, I don't think there's anything that could replace euro dollar, pound, and your majors at this point. But I think you're right in the sense that there's been so much hype, and you could almost sort of speculate on who's actually trading these single stock, either they're CFDs or just actual fractional shares and stuff like that. That these people, the majority of these investors, are probably not well prepared for what might
Right.
happen. So,
That's right.
mhm. Yeah.
Yeah. And so I think it depends on, on what it is. But there's a lot of places where, there's some brokers where this makes up a decent proportion of the trading. Um, and that is something that they're going to have to look at. And obviously, customers will shift behavior, so it will be
Hmm.
those same customers will get out of those positions and do more index and more FX trades as vol rises and stocks become less attractive.
Right. Hmm.
But you're going to have, so there's always a portfolio shift, right? That happens in these places, but that is a risk. Like, so if you look at where things, last time blew up, this was where it was.
Hmm. Hmm.
Like I said, we don't know, excuse me, where that's going to be in the future, but I think that's the real,
But it's a great indicator.
yeah, yeah.
Hmm.
So I think it's that, you know, right now, all the blowups seem to be isolated. Like crypto blowups are isolated in crypto, and like the loss-making tech stocks, the pandemic, people that benefited from the pandemic, their blow up is very sort of contained, right, in their little indices, but that doesn't have to be the case going forward. And usually things like real estate and things like that, there is no way to contain the contagion from that.
Hmm. Yeah, agreed.
Um,
Agreed.
so it depends really what happens.
Hmm.
Uh, but I think it's a safe bet that lots of pieces will be moving around because the world has yet to accept, right? We have yet, if you think about big businesses to households, have
Hmm.
yet to accept funding at these levels, right? Like if I give you an example, if you have a lot of money, even if you have a lot of money at 0.2% interest, no one has enough money to live off the interest. You
Hmm. Yeah, of
have to
course.
go risk your money.
Yeah, yeah.
if you have a lot of money, be it you're a pension fund or a high net worth individual or whatever it may be, and risk free is 5%. So, now blue chip corporates, it's a little bit of risk is going to be reprices to 6 or 7% or 8%.
Mm-hmm.
What yield are you going to have to expect from risk to
Mm-hmm.
attract you, right?
Mm-hmm. Mm-hmm.
And so enough people will say, look, I have $100 million, 6%, that's a lot of money. Like, I don't need more than that,
Mm-hmm.
and
Mm-hmm.
that's going to be a big shift. I think a lot of money will come away from those places where
Uh-huh.
it really went, and that is going. The world's not used to this, right? How do we,
Sure. Right, right,
you
right, right,
know,
right.
what is it? That's why everybody thinks stock valuations are going to have to come down, and like there's lots more damage to be done because the world would be a different place as those interest rates settle,
Mm-hmm. Mm-hmm.
at those levels,
Yeah,
right?
yeah,
And
yeah. Well, we'll wait and see.
right.
We'll definitely wait and see. Well, Drew, I want to wrap it up. It's been a really long but very informative and insightful discussion. Thanks for taking the time to speak with me today. I wanted to wish you and your family happy holidays as we end the new
Same
year,
to you.
and luck and success in 2023. I hope we can do something like this next year as things progress in the markets and in the industry. Maybe a podcast or something like that.
Absolutely. You can
If
come,
you wouldn't
when the
mind.
world is all roses and there's peace and there's no volatility. You can come and call me bullshit on everything I just said.
All right,
You
cool.
know,
Well, thank you. Definitely been a pleasure.
yeah.
And thanks a lot and have a great day.
You too. Thank you.